Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Today, traders, we're going to take a look at a trade setup in GDX. This is the gold miners ETF that has been under a lot of pressure in the face of a rising US dollar, a near 100% chance of an interest rate increase in the December Fed meeting, and likely more to come after that. So the gold market looks like it wants to continue lower. The gold miner ETF looks set to continue. But first, before we jump into the chart, let's look at some of the top holdings in the GDX and show you a pretty consistent theme. So to start, one of the biggest holdings is AVX, which is Barrick Gold. You'll see a pretty solid downtrend here over the last several months with this little bear flag pattern, which is basically just a holding pattern that forms following a pretty strong trend, which usually resumes in trend resumption on the downside. Another stock in the GDX is Newmont, NEM. You're going to see another consistent downtrend theme followed by this holding pattern, expectations of lower price. And then finally, we'll finish up with GG, which is Goldcorp. You're going to see pretty much the exact same pattern. So what this makes us think is when all the stocks are basically looking the same, why don't we just trade the ETF, which takes specific company risk out of it, takes some of the gap issues out of it, and individual company news that might really impact that stock, kind of mitigate the risk and just go to GDX. So the stock is looking pretty good on the downside. If we scroll out here just a touch, you can see that the market has been in a pretty consistent downtrend here through 2016, and it looks like we're just set to continue the downtrend. I'd like to try to take the stock through this $20 region down into these lower support levels right around 18. Also, what I'd like you to keep in mind is we are coming up on the Thanksgiving holiday, and there have been several occasions over the last 10 years where the currency markets have made a big move once the US goes home to eat Thanksgiving dinner. So that actually starts to tell me, wonder if the dollar bulls or euro bears might go try to search for that parity level in the euro. Remember, euro dropping, dollar up, pressures the gold, which will hit GDX. Possibly a long shot here, but let's just keep it in mind. It's happened in the past. So let's go over to the options market and put this trade to work. I'm going to go out to the December monthlies, about 25 days to expiration. I'm going to go ahead and buy that 20 put. We'll have to pay about 40 cents for it. I'm going to sell the 18 put. I'll take in about 8 cents for it. Altogether, net debit of 31 cents, which means we'll have to pay 31 to get into this option spread. We will potentially make 169, so a positive reward to risk ratio. Of course, we'll have to pay the commission as well. So that's a favorable trade. Now, as we put this trade to work, I'm just going to let this thing go. We're only putting out $30, so I'm not going to put a stop loss on this position because it is such a small premium outlay. So I'm going to fully accept, and you want a position size such that if you were to lose the full premium, times however many option contracts you trade, that's no problem, and that's been kind of assessed in your risk plan. So I'm going to position size such that the $31, no problem. Okay, so let's put this trade to work. Place trade, and we are working. All right, guys, that is the trade in GDX. Good luck on that. Be sure to follow us at Trading Nation on Twitter for updates of this trade, as well as all the other positions we're working. And we'll see you on the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.